All right, today I want to cover the SPY, Gold, AMC, and American Eagle. There's a lot I want to talk about, and there's just not time. There's so much noise, there's so much news, and all I'm going to do is cover the charts, and maybe I'll interject here and there about what's going on with Ukraine and Russia and whatnot, but it just really does not interest me that much to try to come up with my own narrative. There is so much information out there, I don't need to clutter or muddy the waters at all. So, what am I looking at? This is the SPY, this is the daily chart, and what I have drawn up is kind of sloppy. You can see a 1, 2, and 3 move down, and then a period of consolidation, followed by another 1, 2, and 3 move down, and then another period of consolidation, which I've shown here in yellow. And I guess this could be a rising wedge, or it could be, another horizontal level there, and that could be a rising, ascending triangle, whatever, it's fine. However you want to view it, these are points of consolidations amongst these really controlled steps down in the SPY over a period of time. And what I want to point out mostly now is that having come off their highs and having fallen from that last period of consolidation, the RSI is now officially oscillating very, very bearishly, failing to rise above the 50 level and actually turning near that 47.5 level. And I have some yellow arrows here to show that when the RSI hits that level, it drops. And it comes up and it starts to drop again, and it's turning down. And what I want to point out is these really, really clear indications of these downturns. You can see that from this high, we had a big move down here in red, and you can see that the volume spiked above that 30-period average. And again, the volume spiked again when the bottom of that move was found. So what follows is a decrease in the volume trend as the price is consolidating, or implied volatility is dropping through here. So this is a corrective wave, right? The corrective wave, and then the measure move down ensues. Until you find the next bottom, then you have this next big volume spike, and then the volume enters a downtrend as the price consolidates. And you can see that occurring here in this ascending triangle formation. So, implied volatility through this point is also decreasing. You can see that, and it begins to rise again as what happens? We have volume spikes above the 30-period average, and as the price is moving outside of that chart pattern. And this is a reoccurring pattern. This is what a controlled descent looks like. And now we have the RSI making lower highs and oscillating in a more bearish way. And we did have a big volume spike here as well, and you can see that that bottom was pretty solid, but again, it's lost steam this week, and now we have a breakout below that pattern. Again, the volume, though, is not high like it has been in the past. So moving into early next week, what I'm looking for is a volume spike above that 30-period average that takes the price outside of the pattern of this rising wedge. And I don't feel the need to zoom in on that too much. I probably will, though. You can see that implied volatility is rising, and as the price reaches new lows, I anticipate to see the price of that volatility increase, and the price of puts on the SPY to increase drastically. It just depends what happens next week. The Fed is we are having liftoff, as they're calling it, where the Fed's going to stop stimulating the economy through the equities markets, and that should lead to some pretty, that's going to be chaotic, right? So this is that falling wedge. You can see the 1, 2, and 3 touch points there, and maybe this horizontal line should be, or this lower trend line should be there. So we have 1, 2, and 3 trend lines there, and then on Friday we had a breakout, and the price did rise to try to test that breakout price, failed, and now it seems to be moving lower. There was a double bottom attempt, and the price failed to rise above the intermediate high on the day at 433-ish, and so the double bottom did not confirm. And I expect to see on Monday the price may rise and then drop again. The apex of this falling wedge occurs sometime tomorrow, so perhaps, or on Monday I should say. Oh, it is tomorrow. So we should see the price rise probably until, I don't know, late in the AM, and then there could be a big PM sell-off. It just depends on whether or not we have a catalyst event. And there is a lot of news coming out about inflation, economic data, and interest rates, the federal fund rate. So, oh man, it's looking like the SPY is ready to dump again. That's what it looks like. Zooming out to the weekly. Let's drop. This is supposed to be a blank chart. Can I make this blank, please? Remove drawings. Clear drawing set. Yes. So here we are on the weekly time frame. And we had this big bullish the hammer reversal last week, and I said, watch this, watch for a close above this candle to signal a corrective bounce and move higher. But instead what we got was a doji, and that's kind of concerning. This means that there was a reversal in place, and then boop, just totally stopped, completely nullified, and I would expect to see the price continue to fall from here. That just does not look very bullish. It really doesn't. And we had a similar pattern back here. We had a big red candle, and then the price formed this weird, I don't know what you want to call this, this kind of candle. It's really just a nothing. It's a nothing burger, and the prices fell. So, okay, that's the SPY. It looks like it's ready to go down. Let's move on to AMC, because it's in watching the downtrend in AMC that has really got me worried about the SPY, because I've gotten a lot of experience charting downtrends because of AMC, right? Now this is really cluttered. I'm gonna go ahead and just turn on a blank chart so I can give myself something to draw on. Okay, so this is a weekly chart. I want to take it out to the day, and let's start at the beginning of the downtrend. Right here. So what we saw in AMC was, you know, the measure moved down, right? And we saw this in the SPY, down. And then a consolidation pattern, right? Some sort of triangle, and then another move. And it was hard to say really where that measure moved down, fell somewhere in there. And then we had an attempted bottom here that failed too. And this is now just turned into one really big consolidation pattern. Okay, it looks something like that. And this basically is charting what the SPY is doing now, and the two seem to be at the same point. AMC having led the way, the SPY catching up, and now both are moving congruently, I think. AMC does not look to be in a bullish position at all. We did have earnings, and my takeaway from earnings was, I mean, a lot of good narrative by Adam Aron, yes, but the truth is that attendance is still much lower than it was in pre-pandemic levels, and the business is still not making money. That's the end of the story. The company is surviving on the grace of its landlords and the money it raised through a share offering. So I think that AMC does have time to make a profit, but it's a race against time. So I've been going to the movies a lot lately. I really have, and it's kind of sad going to the theaters. It's like, wow, this is so great. I love this, and then it's like, but I know the company is like really in trouble. And it's possible we're going to go into the next recession, and that's going to hurt consumer spending, and that's going to hurt attendance even more. And it's just like, God. I think that even though utilization's at 100%, I think the shorts are just going to hold. There's going to be open short positions at 100% for a long time, I think. Just technically, you can see the RSI is, God, it's starting to turn around at 50, just like the SPY is. It's ready to just dump. It's ready to dump. Implied volatility is pretty low, which is good, but I anticipate to see that rise as the price blows past 1330, and I do expect that to be next week. I really do. Just looking at this is a hella bearish chart. It just is. There's no getting around it. There is no getting around it. I do not understand where the bulls get off anymore on this stock, and I know that's lost me a ton of viewers, but I don't care. I have been right so far about this downtrend ever since, well, I accepted it was starting back here. And this doesn't look bullish. This looks very bearish, and there could be a catalyst event next week that I could just drag this down with it. So now let's talk about American Eagle Outfitters, because American Eagle Outfitters also had earnings reports this last week, and they were not bad at all. They made one comment like that oil was going to be expensive, so shipping was going to go up, and that was going to hurt their profits moving into the next quarter. But that's going to be true across the board for every retail company ever. Realistically, the company made a ton of money. They did a great job during the pandemic, and moving forward, they're doing well and expanding. And given that they aren't a very international company, I don't think that they're going to be impacted as much by the sanctions and the geopolitical conflict. So, why is the price at $17.95 after earnings? This is absolutely insane. It will drive me crazy for the longest time, and actually I've lost a lot of faith in the equity markets over what I just saw happen, because I've been waiting for American Eagle Outfitters earnings to come out good, which they did, and to see the price move higher, closer to the target price that analysts have in the 30s. This stock is trading in the low 20s, analysts are pricing it in at the 30s, and I see a company that's paying dividends and making money. I find that this is a value stock, and to see the short interest at 20%, 20+% is ridiculous. And then to have the earnings come out and the price drop on those earnings despite meeting estimates and performing well, just totally killed my faith in the equities markets. There is no way that this drop in price reflects a real value in the company. So here we go. Let's talk about what we're talking about. So here we were. I bought a bunch of calls, right? Yeah. Let's see. Yeah. Okay. Get this. You're like, whoa, what's going on? Okay. So here we go. So the price fell, and I bought into some calls back here, and it was pretty dramatic watching all this price action occur, whatever. And then the price seemed to rise right before the earnings announcement came out, and then the instant it came out, you can see right here, the price just falls off the screen, right? And the move is so severe that the day's price action looks flat compared to it. This is nuts. Look, the opening here was at $21.30. And then the price fell in 2 minutes down to a low of $19.04. So this is crazy. What is this? So a low of 19, so 20, 21, $2, right? And change. That's 10%. 10%. The stock fell 10% in 2 minutes on okay or good earnings. Please, how does that make sense? And how much volume was it? Let's have a look. Whoa. I lost track of it. Here we go. How much volume was it? Okay, on this candle here, we had 3,100 volume. Here we had 30,000. So on 3,000, 30,000. Okay, so it was higher here. So 33,600. 33,000 volume sent the price tumbling 10%. Let me put that in perspective for you. What is our current 30 period average? 5.8 million. 5.8 million is the 30 period daily average in volume on this stock. And 33,000 sent the price tumbling 10%. That is ridiculous. That does not make any sense. There is no reason why 1% of the daily average volume should send the stock tumbling 10%. Please. It does not make sense. So this has completely destroyed my faith in the equities markets. I mean, derivatives are bad enough. Like, I don't really think that trading calls and puts is really a legitimate way to make an investment. I really don't. I don't like derivatives markets. They're problematic. In 2008, what was the problem with the financial markets in 2008? Derivative products. Nonetheless, I digress. I'm getting ranty. This is stupid. This is so stupid. This defies the technical analysis. It defies the fundamental analysis. What this shows me is that the price is being pushed around, and it is not on a technical basis, and it is not on a fundamental basis. It is solely on the will of some other entity that the price is moving in this way. That is the only explanation, the only rational thing that the only rational conclusion I can come to explain why this is moving this way. AMC, not making money, okay? Not making money, lots of debt, okay? Price goes down, makes sense. American Eagle, making money. Price goes down, whatever, okay. That is ridiculous. Ugh, puts a bad taste in my mouth. Let's go ahead and look at gold next. Now, gold is on a tear, and I'm happy to say that I got into gold before this started to occur. I think that this move in gold, this is a long time coming. If you watch my last video, you're going to see I have these charts of the money supply going way up, and of course, inflation's going nuts. That is, the prices of goods and services are going much, much higher because the inflation, which is the increase in the money supply, has been unleashed. And so $2.2 trillion of money is now going to start being reflected in our pricing of goods. And well, commodities are going to skyrocket, and here you go. Here you can see gold just going through the roof because the level of uncertainty at the moment is intense. Oil is going to become expensive, very expensive. The price of gasoline is going to go absolutely bonkers, and we're going to go into a recession. There's just no doubt in my mind we're heading straight for a recession. I've been saying this for a while now. Like, hey, the writing's on the wall. It's just, oh, God. It's like watching a train wreck in slow motion. That's what it's like. And I just have to sit here and watch. So, you know, gold's going up. This is the majority of my position at the moment. So that's good. AMC is probably going down further. The SPY is probably going down further. I think inflation is going to be bad. I think the Fed is going to be surprisingly hawkish. And I do expect things to escalate in Europe. So, yeah, buckle up.